Hello guys, welcome to today's session in Quantsapp. Today we will be learning about iron condor strategy. Okay, कब उसको use करना है, किस तरीके से use करना है. So we will be discussing all of that. But before starting the video, if you are new here, you can go in the description. There is a link below with the help of which you can download and install the Quantsapp application. Okay, after successful registration, you will get some free tools. Okay, like this, 25 free tools, right? So you can use them in your trading. Also, in the learn section, we have our video library, right? So at any point of time, if you want to see any videos on Pro Plus tools or on any strategy, so you can watch these videos. Okay, there are multiple videos available in multiple language as well, right? For example, English, Hindi, Gujarati, Marathi and Tamil. So you can set your preference as well. Okay, now at any point of time, if you guys are having any kinds of doubts or query, so you can go in the profile section, and in the profile section we have our support, right? So the contact number and email ID will be there, so you can reach out to us and we will be there to sort your queries out, right? So let's get back to today's session, that is the iron condor strategy. ठीक है, कैसे यूज करना है? So first of all I'll clear some basics, right? So if I'm talking about iron condor strategy, right? Strategy, okay. ठीक है, iron condor strategy. Now first, when we have to use it, right? So for example, if there is a market, okay, and suppose you are near expiry, and when you are near expiry, so at that time the IV is very high. The IV is high, right? The IV is high. It means the implied volatility is very much high, right? Now, if the implied volatility is high, so we know that implied volatility is a mean reverting, right? For example, let me show you in the application. So this is the IV chart. Yes, you can see. So here the blue line is the future price and the white line is the implied volatility, right? Implied volatility means forecasted momentum, how much the market will move in near future, that is replicated or that is shown by the IV, right? Now I can see whenever my this white line, that is IV, whenever my IV it goes above, okay, it always come back, right? So it means it always revert back, it moves like this, okay, it moves like this, okay, just a second. Okay, so we can see here the IV always moves like this, okay, not like the price can move like this, okay, so it is moving and then again in a continuous direction like this, right? But when I talk about this, so IV always moves in a range, okay, so that is why IV is a mean reverting, it means it will always revert back, right? So if I'm telling you that right now the IV is high, for example, at this time you can see this was the time of June when there was election, so at that time there was maximum IV, that is 27.54. Okay, so there was maximum IV 27.54. So we saw that after that, the very next day, the IV fall back. It means the implied volatility decreased and the market was segregated. You can say it was in a sideways direction, right? So if we are near expiry and at the same time we can see the volatility, the implied volatility is very high. It means in in upcoming time the IV will cool down, right? So when it will cool down, then there will be no momentum, so the market will segregate in a sideways direction, it will move in a range. So at that time what we have to do, then we have to apply this strategy, right? That is iron condor strategy. Now before explaining this strategy to you, right, I have shown you two things, that when we are trading near expiry and the IV is high and the market is in, you are expecting the market will be in a sideways direction, right? So these are the three things. Now what can I do? I'll make a range. For example, suppose right now the market is trending. For example, let's take Nifty. Okay, so suppose Nifty is trading at 26,000, right? And right now the Nifty is here. Okay, so I'm thinking that the Nifty will not cross 26,500. Okay, and in the below side the Nifty will not cross 25,800. This is my view, right? So what I'll do, I'll sell this level, okay, so I'll sell 26,500, right, and I'll also sell 25,800, right? How will I gain the profit? Okay, so I'm expecting the market will remain between these two levels, right, and the expiry is also close, the IV is high at the time, okay, so it means IV will cool down, so my market will remain between these two levels. The market is sideways, I can see that, right? So this is my perception, these are my two levels, so I will sell this level. It means I am expecting the market will remain below this level, that is why I am selling it, right? So I'll gain the profit if my market will remain below this level. Similarly, I have sold this level, it means the market will remain above this level, okay, so I'm selling it put here, okay, and call here, right? So these are my two levels, okay. Now if my market will remain between this level, then I'll gain a profit till expiry, right? So I'll enjoy the premium. So this is called the strangle. This is called the strangle, right? When I'm selling a call and a put of different strike prices, so that is your strangle. But what if at any point of time, if the market will break this level and it will go in the above direction, then I'll face loss, right? Because I'll face loss from this position, right? It will give me a unlimited loss, because as a seller, I'll face unlimited loss, right? Similarly, if my market will break this level, okay, 25,800 and goes in the negative direction, then I'll face a unlimited loss from this level, from this position, right? So to maintain that, to maintain a precaution for these kind of conditions, what I'll do, I'll add a leg here, I'll buy a position, I'll buy a OTM call, okay, so that if my market will break this level, right, so at that time I'll gain a profit from that position, from this position, so it is a hedging for my this position, right? I hope you understand. Similarly, I'll buy a OTM price, a OTM strike price for this level as well, right? So what it will do, it will provide me a hedging position for this position, and similarly this position will also provide me a hedging for this one, right? So overall I am creating how much legs? I am creating 4 legs here, okay. These two, the first one and the second one, these two are my you can say are my sentiments, okay. My market will remain this between these two levels, but at any point of time, if my upper range or my lower range, or you can say break even point, if they will get breached, okay, so at that time my buying position, my buying OTM strike price will give me a hedging position, you can say, or you can say a precautionary position, okay, so that will save my unlimited loss, right? So I hope you guys understood, ठीक है. अब हम इसको एक बार मैं आपको इसको एप्लीकेशन में दिखा देता हूँ. So I'm opening Quantsapp application here, and in trading, let me select the trading here. In trading, I have to go in the option architect, okay. In the option architect, I have to go on the custom, okay. अभी custom में we have made this strategy already for you. You just have to apply it, okay. Either you are trading in indices means either you're trading in Nifty, Bank Nifty, mid cap Nifty, anywhere, okay, or you are trading in stocks. So you just have to select your symbol here, okay. For example, I have selected Nifty right now, okay, and now in the custom I can see now I am interpreting, or I am pretending the market will be in sideways direction, so I'll choose what oscillate, right? Now in oscillate I can see a strangle, a short strangle, right? So that was the first thing, right? So you can see right now I'm selling 2 positions here, okay. So these are my positions, okay. I have sold these 2 level, 1 call and 1 put, but you can see if my market goes against my level, let me make it clear for you, right? So I am having a profit of this much, I am having a profit of 1000, but at the time when my market will go against my levels, okay, and it will break my break even point, that is 25,319 and 25,492. So at that time I am having a loss of approximately 30,000, okay. You can see from the tabular form also, right? So I am having a loss of approximately 37,000 if my market will go against my sentiment. Similarly, in this side I am also having a loss of 30,000, okay. So to prevent this loss, what I'll do, I'll add 2 positions here, that is my buying positions, right? So what I'll have to do, I have to go in the select strategy again in the either ways, and then instead of choosing strangle, what I'll do, I will choose short and Condor, okay. So where am I? Short and Condor, short, yeah, this one, okay. So let me change it, okay. So just a second, okay. So here you can see I have sold my 2 levels, you can see, I have sold my two levels, right? So you can see the first one is of 25,400, okay, and the second one is of 25,450, right? अगर मैं एक ही strike price का कॉलर पुट सेल कर देता तो that would be a straddle, ठीक है? Now I have choose two different strike prices, so that is my strangle, okay? So that is my strangle. Now to prevent my break even points that are break even points ऊपर हैं, ठीक है? To prevent my break even points, I have bought two levels here, एक ये वाला और एक ये वाला. Right? So अगर मेरा market in case my break even points would be broken, okay, so at that time these positions, this one and this one will hedge my positions, right? So अब एक बार payoff देखते हैं कि payoff क्या बन रहा है, ठीक है? तो मैं इसको हटा देता हूँ, right? So you can see my break even points right now my market is at 25,380, ठीक है? तो अगर मैं इसको देखूँ where it is 25,400, so I am having a profit, just a second, हाँ, bought, okay, यहाँ पे गलत हो गया, ठीक है, okay, so you can see this is my profit when my market was between my two levels, right? But in case अगर नीचे भी जाता है still I'll be in a loss of 369, I am not having unlimited loss here, right? Similarly अगर मेरा market ऊपर भी मेरे expectation के against जाता है still I am having a loss of 369 only, not unlimited loss, right? So this is the strategy from where, and in case I'll multiply this with 3 lots, so you can see, right, still I am having a definite loss, okay, so my loss has prevented with this addition of 2 more legs, that is my buying positions. OTM price, just only go with the OTM price, okay, so that was the thing, and that is the strategy known as the short call condor. You can also create a short put condor with this strategy, right? So at that time what you will do, you will go with the put positions, right, for the hedging, okay? So guys, that was it for today. I hope you guys enjoyed the video. काफी कुछ समझ में आया होगा, ठीक है? In case confusion है, you can rewind the video also, okay? And thank you so much. अगर आपको वीडियो पसंद आई, you can like it, you can comment your views down also, okay? If you are new here, you can subscribe the channel. Thank you so much guys. This is your trainer Ankit Singh Rawat. Have a very good day.